All right, good day, folks. Testing 1 2 3. Testing 1 2 3. Do me a favor and type a D in the chat. D as in dog. D as in David. Type a D in the chat if you can hear me and see my screen, please. All right, trying to get the questions window open here so I can see. All right, perfect. All right, guys, how's everybody doing today? Welcome. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. Hopefully, if you registered for top tools for catching corrections and major moves, then that is where you are at. You are in the right location. So let's go ahead and get started here. Everybody can see, sound good, audio good. Check, check, check. 1 2 3. All right, 1 second here. Got a few folks piling in. Everybody have a good day today. Market's starting to heat up, starting to get a little volatile. If that concerns you, well, shouldn't concern you. You need to be quick, be nimble, be able to trade all sides of the market at all times. Excited to share with you a strategy that works in all market conditions. All right, Peter, can you see now? All right, gang, let's go ahead and get started here. Welcome. My name is Silas Peters. Again, I'm founder, head trader of Seasonal Swing Trader. Appreciate your time. Appreciate you being here this evening. I know everybody has commitments. How you doing? Nice to see you too as well. And I'm excited because I know that a lot of you have places to be, probably could be spending your time doing something else. But if you are here, it means that you're serious. You are ready to take your trading to the next level. And, you know, I wouldn't frankly be wasting my time if it's not something that I believe in and not something that I believe that could help you as well. So regardless of what market you trade, what time frame, your trading style, we'll go through all of that. But I want to show you how important this strategy is, how it works, how accurate it is. Is it the Holy Grail? Of course not. Nothing is. But I'm going to show you how to put probabilities well in your favor. So it's midnight there in London. It is, James. And let's go ahead and get started. You guys have things to do. Let's go ahead and get started here. We must always begin by reading the risk disclaimer as required by the regulatory governing bodies and our attorneys. Past performance is necessary not to give future results or substantial risk of loss associated trading. Trading future stocks, options, forex, equities is risky. You can lose more money than you put in your account. So what this means is don't trade with your rent money, your mortgage money, your child's educational funds, your milk money. Trading is risky. If you don't understand that or want to copy the risk disclaimer, please reach out to me. I'll be happy to send it to you. Let's start off here with the distractions. We want to shut everything down, remove all the distractions. That means closing browser tabs, logging out of Facebook, putting your phone on mute. We're going to be together for about 60 minutes or so. And I do encourage you to ask all the questions you wish and want during the course of the presentation. I'm not ignoring anybody. I want to get through the meat, teach you the strategy, and then at the end, I'm going to go back and answer everybody's questions. We're going to look at real live chart examples and go through anybody's questions, inquiries, or concerns. So let me properly introduce myself here before we get started to show you that I'm not a robot. I'm a husband, father, son. I love hanging out with my family, whether it be at the beach, on a boat, hiking, on the golf course. I spend a lot of time working in front of the screen, so I do like to get outside, enjoy the great outdoors when I can. Just pictures of myself, my wife, my 2 girls, and my white lab snuck in there here in a picture. He is occasionally a photo bomber, but just to show you that I'm just like you, and you know, I do have things and commitments outside of the trading world, and I like to do that whenever I can. But how did I get here, get to where I have the privilege of speaking to you today? In college, I majored in finance and economics. I had no idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. And we were playing one day, and he asked me what I was going to do. Of course, I had no idea. And when he told me what he was doing, or what he actually had done, he was retired and now on the Gulf Coast where I am now. It intrigued me, immediately intrigued me. I was enamored by all things Chicago, trading, pits. And so I went back and I started doing research on Chicago and the trading floors, the mark, the board of trade, commodities, and all of that. And what did I do next? Well, needless to say, I was a bit green on the sleeve. When I sold my car 3 days after graduation, rented a U-Haul, drove to my new digs in downtown Chicago, drove here to Marina City and signed a lease. I was on the 23rd floor of Marina City. My balcony was probably larger than my entire unit, overlooking the beautiful Chicago River here. Has Smith & Wollensky's down here on the bottom. House of Blues was on the bottom floor. Harry Carey Steakhouse a block behind me. I thought I was really living the dream, even though I couldn't afford a water here at Smith & Wollensky's. A great experience. And actually, on the same day I moved in, I took the U-Haul truck back to its depot, hopped on an Amtrak, and I scalped a couple tickets to the U.S. Open at Olympia Fields in Kohler, Wisconsin, to chase Tiger and Phil around. So I call that my first trade while I was in Chicago. As soon as I got the tickets, the guy disappeared so fast, I thought I was being made by a market maker, but they actually worked. I was able to watch on Saturday and Sunday. Got a couple of people saying no audio. Jimo says no audio here. Let me type to him before I continue. I'm going to tell him what I'll tell you. Try F5 or refresh, and then as a last resort, you can log out and log back in. But everybody else says that there is audio, so I think we're going to keep on going here. Sood says audio could be louder, so let me adjust my mic. Okay, if audio is good, let's keep on with the stuff, the good stuff. So back to my journey, or my career path, if you will. My first career entailed this. So I want you to picture this. I was working the Asian, European, and early New York session trade desk. If you remember, well, actually, I sold my car before I drove to Chicago, so I had no car. I didn't even have a bicycle. Well, this picture here could literally be me walking to work at some time around 6 p.m., 2 a.m., where I got off early, maybe even 6 a.m. I remember on numerous occasions me walking down the middle of LaSalle Street right here, nobody but me in a snowblower in the entire city of Chicago, and then getting into the board of trade and the temperature reading a solid negative something degrees Fahrenheit. And I remember when the teens were like a godsend of warmth. We got into the teens or 20s, it was getting warm. And remember, I am from deep South Alabama on the Gulf of Mexico. All I know is heat and humidity. So this was certainly a wake-up call. But I did this right here for a few years, working at the board of trade, handling some serious trade size across the board of trade, the mark, NIBOT, NYMEX, London and Asian exchanges for a hedge fund, also trading for banks, CTAs, everything from corn to copper to hogs, euro dollars, Japanese government bonds. It was an incredible learning experience, both with the markets and trading, as well as the Chicago big city life. But I decided to head back south when some other opportunities opened up. And that's what I like to call me going truly corporate. I went from a fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life, managing equity and fixed income portfolios and other investment management roles. And to me, this was extremely boring, but it was the safe route. But I missed the action and the excitement of the pits, the tape, the screens. So through some additional contacts, I was led to a day trading firm where I helped run operations, execution, trading education, to then running a couple of futures brokerage firms, and then ultimately working in a private family office serving ultra high net worth individuals, doing a hodgepodge of all of these things. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading, the trading world, me sitting in an office tied to a desk, looking out the window, and of course, dealing with the typical corporate red tape was just not in my blood. I am not a sit around the water cooler, shoot the you know what type of person. I wanted to get back to the markets, to the charts, to the trading. And while I was still trading during this time, I truly missed being in the weeds of the market, following charts, doing analysis, and so on. So I started Seasonal Swing Trader. It's here where I publish research, ideas, and analysis to my followers, and it holds myself and our community accountable each and every day. But during this journey, there were certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I quickly learned that I was not a trading god. I was not above the market, and the market did not care what my position was, and it damn sure didn't care about my opinion or what I think or thought it should do. So what does that mean? It meant blown accounts, emotional trading, acting like a gunslinger, poor risk management. But I attribute that to all battle scars. In this workshop, I'm going to attempt to help you think smart, think logical, with a proven price action strategy and plan, so you can avoid the many mistakes that I, and I'm sure several of you, are making today. But let's talk about you. Why are you here? You're here to have a reliable pattern for all market conditions, have a strategy for all asset classes, and to be agnostic of market bias. In today's markets, it's imperative to have or make certain that we have a strategy that can trade both ways. We need to employ strategies that can profit during up markets, down markets, and sideways markets, and do also without guessing. So today, I'm going to show you a pattern that results in trend reversals, show you the point where a trend is likely to reverse, and I'm going to show you a pattern with the least risk and highest reward. So who all wants to see this, and who is ready to get started? William, we have sound. We are rocking and rolling. Let me get at least a few or handful of people say they do hear me. He is asking me when I'm going to start and where his sound is. I want to make sure that I'm not speaking into a black hole. Can everybody hear me? All right. Let me address him. Loud and clear. All right, good enough. Let's go ahead and keep trucking. So a lot of people are ready, and you're ready to quit playing games. Let's talk about something that actually works. So I'm not going to sit here and teach you a strategy that only works on a 1 minute Bitcoin chart, or has to be a weekly Facebook chart, or a 4-hour crude. I'm going to show you a simple and straightforward strategy that works in any market, in any condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol. You could be a tick trader, scalper, day trader, swing, position trader. I don't care if you trade the underlying, you trade call options, put options, debit spreads, credit spreads, reverse crouching tiger, hidden dragon, condors. I don't care. What I'm going to show you is powerful, and I'm going to prove it to you. Before we continue, it's very important that we cover the process. Has anybody here heard of Jesse Livermore? I encourage you to read Reminiscences of a Stock Operator if you ever get the chance to do so. This is a famous book. It's almost a requirement if you are involved in trading. It should be on every trader's bookshelf. A question I often receive is, what do you think about the markets here? My typical response is, I don't know, and I don't care. And I know that that sounds harsh. Maybe it sounds ill-informed, especially when you're asked by friends or family members, maybe even your in-laws during Thanksgiving, but it's true. For the most part, I don't care about the daily news that flow in and out of the market. I am a trader that trades strategies based off probabilities. So it's very important that we forget about market assumptions and only focus and trade with high probability strategies in what is actually in front of us. And that means no more guessing or no more predicting. And we must also realize that knowing what is going on in the news and knowing how to make money consistently are two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what you think the market is going to do tomorrow. And I realize it's a very difficult concept for maybe new traders to understand and even seasoned traders. I certainly struggle or have struggled because it's natural to want to form our own opinions. It's human nature. And it took me years to figure this out because it doesn't pay for me to try to absorb every financial story out there or slap every indicator onto a chart. All I care about is when the markets I'm following reach key criteria. But there is one more trait, because if we allow probabilities and not talking heads to define our next move, we need to really possess and control one more trait, and that is patience. Because we as smart traders know that trades should never be forced, because a forced trade is not a statistically sound trade. We are in this for the long game, and patience is expected if you wish to bring in profits over the long term. And I know that may sound boring to the aggressive crowd out there, but I am more interested in profitable trades, not trying to be a short-term hero who tries to trade every scenario out there. I am confident in trades that consist of key criteria that are setting up, and we're talking about extremely high probability trades. But patience is that key ingredient to the success of this strategy and really all strategies if you wish to be successful. So what is a high probability strategy? It's one that requires patience coupled with a disciplined approach, waiting for the appropriate scenario to unfold with a high probability of success is what makes this strategy a success. It also recognizes that opportunities are made up easier than losses. So if we let a few pass us by, we don't dwell on what could have been, there's always going to be more opportunities around the corner, because trading is really a marathon and not a sprint. And then lastly, I realize that the less I trade, the better my strategy will likely perform over the long term. And the long term is what matters. And this likelihood is what makes my high probability strategy unique and successful. But the grand takeaway is that patience pays. So what indicators do I use? Silas, what is the secret sauce? What are the ingredients? Well, I learned early on to keep it simple. Pick an indicator or two, try and follow them. And I can't tell you how many traders approach me every day that have Donchian channels, market profile, GAN, Bollinger Bands, fib retracements. The list goes on and on. There's nothing wrong with that. But this high probability strategy uses price action alone plus one very common and basic indicator, along with a couple pro tips to take advantage of sentiment and technical extremes. So who here has seen Jerry Maguire? I'm sure everybody has. Love it or hate it, this is a famous line. I'm not going to stand up on my desk and scream into the mic like he does, because I can't show you the money, because I don't know how you trade, but I will show you the opportunity. So let's get right to it. It is, boom, divergence. Wow, what a concept. Who here has heard of divergence? Please raise your digital hand if you have. And yes, this is not a secret. This is nothing proprietary. And this is where the haters will step out and say, I've heard of divergence. It's subjective. This is nothing new. Well, I would encourage you to stick around, and I will challenge you to stick around and see how we apply this concept with a little bit of our secret sauce. So let's talk about, most of you are, let's talk about this for those that aren't. Divergence is basically when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. It is warning us that the current price trend may be weakening, and in some cases may lead to the price changing direction. So basically, it's an indicator and price being in disagreement using any relevant indicator such as MACD, RSI, and so on, and it's an indication of a reversal or a continuation, but more often a reversal. Let's talk about the details. Can occur between the price of an asset and almost any technical or fundamental indicator or data. Is typically used by traders when the price is moving in the opposite direction of a technical indicator. What is it? The details: positive divergence occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence is when price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? Because it's the earliest indication of a reversal. It's a good sign to exit, and it's a good sign to scale into a position, and it means that you're usually buying near the top or buying near the bottom or selling near the top. And that means the risk on your trades are very, very small relative to your potential reward. Let's talk about types of divergence. First, we have classic, sometimes called regular, and we have bullish and bearish. Bullish divergence is when price action makes a flat bottom or lower low and a higher low on that oscillator. Bearish div is when price action makes a flat top or a higher high and lower high in your oscillator. Traders use divergence to assess the underlying momentum on the price of an asset and for assessing the likelihood of a price reversal. So the market is making new highs, but your RSI starts making lower highs. This is warning us that the price of the trend may be weakening. That's negative divergence. And positive divergence is the opposite situation. Imagine the price of your stock making new lows while the RSI is making higher lows with each swing in the stock price. Traders may conclude that the lower lows in the stock are losing their downward momentum, and a trend reversal may soon be following. We also have what we call hidden divergences. And hidden bullish div is when price action makes higher lows, but lower lows on the oscillator. And that's normally what we see in an uptrend. Hidden bullish is telling us that the oscillator is recharging to potentially go back up again, or is a continuation of an uptrend. Hidden bearish is when price action makes higher lows and higher highs on your oscillator, and that's normally what we see in a downtrend. Let's look at some chart examples. This is regular bullish divergence. This is an example of classic or regular bullish, and it's the most frequent and usually considered a sign of a reversal. And this means when the price is making lower lows, but the oscillator is making higher lows. And we don't need a series of lower lows. We only need one low to be lower than the previous low. And this can usually be found near bottoms. Let's talk about hidden bullish. This is a trend following type of divergence. And the price is making higher low, but the oscillator is making lower lows. And this can be seen when the price is in an uptrend and indicates that the price may tend to go up more. Regular bearish. This is the most frequent. It's usually considered a sign of a trend reversal when the price is making higher highs. You see high, higher high, but the oscillator is making lower highs, high, lower high, and this can be found near tops. And then hidden bearish is another trend following type when the price is making lower high with the oscillator making higher high. This can typically be seen when the price is in a downtrend and indicates that the price of the trend may continue lower. Let's talk about identifying strength and consider the following scheme. So at point 1, buyers believe that the trend has recovered or a new trend has begun and they want to make money. So they start opening long positions, buying the market and driving the price higher. The trend accelerates as more and more buyers are jumping into the market. Point 2, Buyers are starting to take some profits. The trend begins to weaken. Buyers still dominate, but they settle down a bit because they're afraid that the trend is coming to an end. When there are no more buyers in the market at point 3, the trend is likely to reverse because the buying starts to dry up, sellers step in, they begin to dominate and push the market lower. Now, we can use tools to help recognize trend and trend strength, and one of those can be found with the popular RSI indicator. I think the rule of thumb is when the RSI rises above 70, the market's considered to be overbought. When the RSI falls below 30, the market's considered to be oversold. It's a great concept, but we want to use the RSI in a slightly different way. Let's look at the same chart again. There's 2 significant highs labeled A and B in the price chart, as well as in the corresponding highs in the RSI pane below A and B. Price chart, we see that B is higher than A. That means the price is still going higher. In the RSI chart below, or the RSI pane, it's just the opposite. B is lower than A. It means that the trend has weakened and is likely going to reverse. And lo and behold, what happened here at point B, the market actually sold off and reversed. Now, we used the RSI indicator in the previous example, but it can be replaced with any momentum indicator such as CCI, stochastic, MACD, and so on. All of these indicators are derived from price. So there's no better, no worse indicator. It's really about preference. It doesn't matter what indicator you put in your back pocket and call your best friend. They're all these approaches are good. What we got to do is focus on what matters, and that's the divergence concept. But before we dive deeper, let's quickly recap for context. Bullish divergence when price makes 2 significant lows, but the second is lower. RSI makes 2 significant lows, but the second is higher. Bearish dip. Price makes 2 significant highs, but the second is higher. But the RSI is making 2 significant highs, but the second is lower. All right, so we previously defined divergence as a discrepancy between price and indicator movement. And note now we've added the MACD to the chart. So when the price is making a new low, lower low, but the MACD makes a higher low, higher low, we have bullish divergence signaling that the trend is likely going to reverse. This is classic or regular. The black line of the price is sloping down, but the black line of the MACD is sloping up. Now, deep divergence. This is a bit more of a subjective term. When you look at this example, you see 2 divergence patterns, a bullish and a bearish. The first divergence is nice, but the second one does not look as promising because the 2 peaks or troughs on the MACD are not as significant. And we consider a divergence to be deep if the MACD crosses the 0 line. When we have such a divergence, it provides a much stronger signal for a trend reversal. So let's take a look. On this chart here, we see 2 div patterns. The first example is an almost double bottom, if you will. The second example, it has more defined peaking action. When we peak, notice that the MACD line then crosses below the 0 line, rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the 0 line, this means that it is a higher quality divergence pattern. So now that we know the basics of divergence, let's look at ways we can approach them in a more smart and methodical manner. We've discovered that these patterns can lead to consolidation, correction, or full trend reversals, and that's great, but we need a more definitive plan about where to enter, where to place stop losses, and where to exit. Because with this strategy, we can make quick profits on small corrections or minor trend reversals, or we can try and capture major market moves. And when the trend does ultimately reverse, it's really every trader's goal to try and stay with the trend for as long as possible. And let's talk about how we do this. We know that divergence is a reliable pattern. Let's talk about ways that other traders see this. Sometimes chart pattern traders may see a double top pattern. Elliott wave traders may see a shortened fifth wave, but they all refer to the same thing, the divergence pattern. This is what chart pattern traders see. This is what Elliott wave traders see, and this is what we see. Most traders don't realize that MACD or RSI divergence is exactly what they are looking for. Our approach removes the subjectivity because the divergence pattern is well defined. So now let's talk about entry. Let's look at this in even greater detail with some charts. The first is entry. I mean, where or how do we even enter these trades? So a couple different ways we can consider entries, and that is a simple enter on next candle open. So we wait for the divergence candle to close, and then we enter on the next bar or candle open. Another method is to wait for a candlestick confirmation, and that's to wait for, say, a bearish candlestick or bearish reversal pattern if we're going short, or we would be waiting for a bullish or bullish engulfing pattern for long positions. Now, we discussed entry. We have to discuss the least fun or exciting aspect of trading, and that's risk management or stop losses, but by far the most important. Now, one could really argue all day about the best place to put a stop loss, but we want to keep things simple and objective. So for a stop loss with this strategy, we can place stops just below the bullish divergence patterns for a long, or just above the bearish patterns for a short. We'll talk about this later, look at some more examples. It's wise to use a buffer, but that's a simple and objective way to manage risk. And we can see in this example that the second turning point, or the point of divergence, acts as resistance from which price uses to retrace, and we're thus protected from being stopped out too soon. So we've covered entry, we've covered stop losses. Let's get to the fun part of trading, and that's actually taking profits or profit targets. Now, remember, our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon here, so we don't want to place the profit target too far. I found in my back testing and studies that a wise place to place the profit target is at a significant area of support or resistance, or what I like to call price structure. This keeps us from guessing an arbitrary amount of ticks or points. You see here we have the Divergence Valley, and that's a good place for profit taking. Notice here that we have very clear price structure at these levels, and price is likely to gravitate towards that area like a magnet. And it's no coincidence that prices have a reaction at these levels. So by taking profits at these levels, we can now profit from divergence patterns that result in minor trend changes or corrections. And we can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to complete trend reversals. And we want to be able to take advantage of these trends that can occur, which we'll cover in just a bit. Candles. When we see candlestick reversal patterns or opposite divergence patterns that appear while we're in a position, that can also mean it's a good place to exit. These reversal patterns can signal that the trend is going to reverse, or at a bare minimum pause. So if we get a reversal pattern that appears close to our first take profit levels, but we weren't filled, it means that it would be prudent to go ahead and take off a partial position. So we can close a third, half, 2/3 of our position and not wait until the price reaches our first take profit level. Now, in this example, this is a good point that I'm trying to make. We can see here's where we got long. Our first profit levels are up here at price structure, and price lurched up to our valley area, put in a bearish reversal candle right near the TP level. Price retraced a bit, came back to that level a second time, reversed again, but this time it drifted all the way to the stop out area. So that's why it's a good idea to consider closing part of our position up here when we get these reversal patterns and not be greedy holding out for that last bit of profit. Now, another great way to trade the strategy is by adding a couple moving averages. Here I've got an 8 and 34 EMA. The 8 is the green or fast EMA. The red is the slow EMA, which is red, the 34. First look at this example shows that the candlestick pattern reversal right here is a good place to exit. And hell, I'm not complaining right here. We got short here, first target's here. I'm not complaining about taking profits down here, but there's room for improvement. When we add that 834, we were stopped out from our shorts by a small candle correction, but notice that the trade continues. The price traded into the MAs, bounced off the slow EMA. We have a chance to re-enter the trade and continue to ride the trade lower into profit, all by stair-stepping above swing highs along the way. So now you see numerous examples of how to catch quick moves as well as longer-term trend-type trades. The most popular approach that I see amongst traders is they exit at a certain number of ticks or points or pips. But to me, that's the wrong way. We know that every market and every time frame have different volatility aspects. So it makes no sense to go for an arbitrary, I'm going to go for 100 pips, or I'm going to go for 3 points on the S&P, or I'm going to go for $7 on XYZ stock, because volatility changes over time, and it changes over time for each instrument. So the best way to determine our exits is you can test the strategy and learning that individual market's movement or rhythm, but that takes time. There's an easier and less subjective way. So let's quickly recap those extra strategies that work for these setups. The first one is structure. Good old-fashioned plain vanilla structure. Valleys and the dips as significant areas of support and resistance. And then the second one is just candlesticks, using candlestick reversal patterns that appear close to our take profit objectives. We can exit our position and then trail our stops however we wish to manage our position. Now, we know that there are going to be false divergences and false setups. What are ways that we can filter these? How do we filter false divergences? Well, we know that when traders are trying to jump in a new trend, they typically need some confirmation. And we know that a trend reversal can be confirmed when the divergence has a breakout. And to many traders, that divergence is confirmed when we have minor support or resistance broken. And there's nothing wrong with this, but with this approach, the entry can be too far away from the start of the move, and the risk can be too high when compared to the profit. Remember, our goal is to limit risk. So here is where most traders are looking to enter, and where we're looking to take profits. We're entering here looking to take profits. Here's where we're entering and looking to take profits where they're looking to buy. And this entry technique is not wrong, but our method is a way to achieve more consistent profits. And I also want to remind you that sometimes the MACD histogram can look choppy, quickly reversing up and down, implying that the market is in a chop zone. And this can generate a long series of false divergent signals. You see this? This is chop, trend, chop, trend, chop, trend. So it's almost laughable when people are Googling and looking all over the place for these so-called famous chop indicators. Hey, I need to put a chop indicator onto my chart. No, you don't. This is your free chop indicator. This clearly tells us when we are choppy or in trend mode. Now, another way to prevent over trading when we could have potential false divergences is to recognize clear patterns. Our golden rule says that the signal line must be crossed by two peaks. So you see chart 1 on the left, see how we have a peak and then the signal line crossed below the 0 line, came back up to the second peak. But on chart 2 or chart B on the right, we have these peaks, but we never cross the zero line. So this is going to be your highest probability signal. Now back to entries. Remember, our goal is to enter as soon as possible after the pattern has formed. And our strategy gives us a signal just after the MACD hook, or what I like to call the turning point. Only after the MACD hooks back above, you'll recognize the second peak on the histogram. And this is where we recommend entering on the next candle open. A very simple, very mechanical rule. But I've further fine-tuned this into even a more reliable method, and that's by using simple trend lines. Experience is showing that simple trend line analysis is a great confirmation tool, regardless of any trading strategy. So when we're looking for a long signal, we can draw a trend line on the chart by connecting the minor highs, and then we place a buy stop order just above the trend line. When looking for a short, we draw a trend line on the chart by connecting the minor lows. We place a sell stop just below the trend line. And when the price breaks a trend line, we are in. And it's very similar to the same quick entry on the next candle open technique, but sometimes protects us from the false MACD hook when the MACD turns again and continues to fall. And maybe a bit discretionary, but it's the most effective way to enter, in my opinion. And let's look at another example, this time to the sell side. We place a small trend line on the chart. We place a sell stop, or we can get short on a confirmation retest of that trend line break. So let's recap everything you've learned. You've learned a high probability reversal strategy, where to enter, where to place risk, and where to take profits, as well as how to filter false setups. But how do pros trade it? Have you ever wondered why the market turns against you when you jump on a promising looking trend? Because the most tempting signal is usually a trap. Is there no more buyers to move the market? The sellers begin to dominate. Is there no more sellers to move the market? The buyers dominate. Divergence masters know how to enter in the opposite direction just before a trend turns. And this is a quote I love by Max Gunther of Zurich Axioms. Yes, following the herd may work sometime. Think of the 90s tech bubble, worked until it didn't. 2000s real estate boom, worked until it didn't. Crypto mania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Of course you do. That's what every trader's goal is to do. And when you trade this way, your winning batting average could be sub 50%. Yes, you don't have to be right 50% of the time. You don't have to be right 40% of the time when your risk to reward is overwhelmingly skewed in your favor. But here are some additional pearls of wisdom. The less you trade, the more money you're likely going to make. We want to filter the unreliable divergence patterns and focus only on the strongest signals. And we want to use a customizable indicator that can deal with this for you, where the process of recognizing the patterns in the charts are done for us automatically. We sit back, enjoy the various exit levels, and find out what suits our trading style the best. But how do we do all this? Well, it depends on your trading style, but you can scalp on the smaller time frames for quick profits, or use the intermediate to longer term charts for swing and position trading. You could trade stocks, futures, commodity, currencies, cryptos, any instruments that you wish, but you have to be patient. You have to avoid over trading, focus on the high quality signals, and exercise patience, because patience pays in the trading game. But how? How do we do this? Silas, there's too many markets, too many time frames, not enough time. And I certainly understand. I am in the same boat with you. We've now developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, scrutinizing hundreds of charts, trying to determine if what they are actually eyeballing is actually divergence or not. We've now cracked the code and simplified the process. But how? Let me see here. I've got to take a swig of water. My throat is absolutely cracking. Who here is ready to treat trading like a business that it is, stand out from the crowd, and trade like a professional? Let me see here who's interested. Of course you are. All right. I want to see people that are excited and motivated, because we are done kicking the tires. I'm showing you a strategy, and I will show you even more if you stick around the end. I'm going to show you live charts and show you that the proof is in the pudding. Well, I'm pleased to tell you that we've automated and introduced Divergence Dominator Pro. DD Pro is a fully complete, comprehensive trading business in a box solution. And I want to guide you through what the Divergence Dominator Pro package is, so you can immediately see how it will benefit you in your trading starting today. What all do you get? You're going to get the turning point identifier indicator. That sounds Greek. I'll show you exactly what that is. You're going to get a DD Pro scanner, Price Action Pro trading course, Candlestick Recognizer guide, Divergence cheat sheet, DD Pro trade journal, TPI fast slow line cheat sheet, and more. But what is it? What the heck is all that? It's a great question. The turning point identifier indicator, what I call a TPI, auto plots divergence setups, scanning the market for you to locate turning points across multiple markets, across multiple time frames. So the TPI, what is this mystery TPI? Let's take a look. This is the TPI in action, daily chart of IBM. You can now, in seconds, pull up your favorite chart, attach the TPI indicator, and bam, see multiple setups across multiple assets and time frames. Here's your bullish TPI signal. Here's your bearish TPI signal. Here is a daily chart of the US yen, bullish TPI signal, bearish TPI signal, bullish TPI signal, bearish TPI signal. Here is a 5-minute chart of the pound, bullish TPI signal, bearish TPI signal. Can everybody see that in action? What platforms? We have it built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MetaTrader 4. This is what it looks like on Thinkorswim. We have the bearish TPI indicator sell signal, bullish TPI buy signal, bullish TPI buy signal. Here is TradeStation, bullish TPI, bearish TPI. NinjaTrader 8, bullish TPI, bearish TPI, bullish TPI. TradingView, bearish TPI, bullish TPI, bearish TPI. And then lastly, MetaTrader 4, bearish TPI, bearish TPI, bullish TPI, bullish TPI. These happen over and over again every day on multiple markets. Now, we don't want to locate these setups manually. We built a scanner for TradeStation, NinjaTrader 8, and Thinkorswim. If you've been trading for some time, we know that these are very high probability setups, but manually identifying these patterns are difficult. It's time consuming, especially when you analyze multiple markets and multiple time frames. And that's where the TPI and DD Pro scanner come into play, automatically detecting the highest probability divergences for you with the click of a button. Here's the DD Pro scanner on TradeStation and NinjaTrader 8, and we do have TOS that don't have an image for you. So combined, the indicator scanner is capable of identifying these patterns across all asset classes, time frames, chart types for scalpers, day traders, swing position traders. But aside from the indicator scanner, I really feel like the crown jewel of this package is my Price Action Pro trading course. This is a never before released course. You're going to get an immediate access to a 10-part on-demand video series with all of the following. This is my only full step A to Z training course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, completely removing the uncertainty, all by trading in conjunction with the TPI. So do you want to quit guessing, feel confident about your entries, remove your emotions, think like a professional, Scale your reward versus risk and have a solid trading plan. If you do, the TPI indicator does all of this for you. And I want to jumpstart your success with the PAP trading course because, as I said earlier, this is no secret. Divergence has been around and used for decades, but not only do you get a first-class tool, an indicator that locates these turning points on your behalf, the PAP course deals with all of the solutions right here that you may be struggling with. You're also going to get access to the Candlestick Pattern Recognizer Guide. This is not your grandma's guide to candlesticks. We know that there are dozens of candlestick formations or patterns out there, but this one is short and sweet, only covers the most important candle patterns that you should focus on. This can be downloaded and printed off for your desk reference and study. You're also going to get the Divergence cheat sheet. You're going to learn regular, hidden patterns, exaggerated, the differences between each, and much, much more. This is great for those that like the written descriptions and summaries, and can also accompany the video modules. So with the DD Pro package, you're going to get the TPI indicator for all 5 platforms, the scanner for the 3, the Candlestick Recognizer Guide, the Divergence cheat sheet, the TPI fast slow line guide, as well as the trading journal. So what is all this worth? What is all this worth? If you're now able to profit in any market condition, you don't have to be biased to the long or short side. You can anticipate major market reversals and turning points. You can trade in your time regardless of your style, and you now had all the tools. You got an indicator, a scanner, videos, training guides, and me, email support. What is that worth? But we have to determine if this is for you. If you like scalping on nanosecond charts all day long, if you love to be stressed out and have heart palpitations, if you get a thrill of blowing out accounts and just going to the bank and just wiring money in over and over again, if you have a gambling mindset, have no clue where the market's likely headed, this is probably not for you, and that's okay. I want to shake your hand digitally, of course, or give you an elbow bump, and you can leave, and I wish you the best of luck. But if you are ready to think like a professional trader, you're ready to remove your gambling mindset, you're ready to treat trading like a business, kick emotions, focus, and have confidence. That's so key. Have confidence before you place your trade, then this package could be for you. If this is for you, I have a very special offer for today's attendees. It's the Divergence Dominator Pro package. Now, the indicators alone cost over $2,000 to build out. The scanners, over $1,500 to build out. The PAP course, all of the guides and cheat sheets bring the total value to $4,427. But I'm very proud of this indicator, the PAP course, all of the other educational material. I want to get this out to those that are serious, tired of kicking the tires, tired of jumping from system to system, those that are ready to remove the emotions, and most importantly, those that are ready to take action and start seeing some real results. So we're not going to charge $4,427. We're not going to charge $3,000. We're not even going to charge $2,000. We're not even going to charge $997. As part of this live webinar special, for the first 15 signups, we are going to offer this for a one-time fee of $397. This is a one-time fee of $397. The offer link is seasonalswingtrader.com/pro. Put that into the chat box. There you go. So one-time fee is 90% off the $4,400 value. You're going to get the indicator suite, the scanner set, the PAP course, the guides and cheat sheets, one-time fee. This is not a recurring fee. This is not a renewal. You own it for life. You get access to all platforms. Now, what I want to talk about are some questions. I get asked all the time, Silas, how do you trade these setups? The easy answer is that it depends on the setup, depends on my outlook. If I'm short or intermediate to one position base, what other positions I have on, the risk reward of that setup. I like to trade credit spreads primarily on equities and commodities, but I will trade debits as well. I will also trade the underlying in both futures and FX. But let me say that what or how I trade really doesn't matter. Frankly, you should never be concerned with what I am doing or what your neighbor is doing. You have a question or an idea, want to ask me about a market, shoot it to me. I don't bite. But at the end of the day, you are in control of your own account, how much capital you have, your knowledge, risk tolerance, and the time you can personally commit. But you can reach out at any time if you have a specific question. So here's the complete offer, seasonalswingtrader.com/pro. And I'm gonna answer all of your questions. We got a lot of them. We're gonna look at the members area. We're gonna look at today's charts. We're gonna look at what happened today. I think the S&P ended out 50 points, and we're down another 5 right here in the aftermarket. And so I'm going to cover multiple markets and show you real examples. So let me get to some questions here. Which is the best time frame for this to be most effective? It's a great question, Rick, and I honestly get that a lot. I mean, there's no best time frame. I will show you examples today from a 1-minute chart, a 10-minute chart, an hourly, a 4-hour, a daily. It works on all time frames. It doesn't matter. And I don't mind saying this. I had a student reach out to me that, look, we're always learning, right? He reached out to me and said, look at this trio of tick charts. And I believe it was a 9, 10, 6, 8, 7. Let me confirm that. I'm referring to another computer where I have Thinkorswim loaded. 987 tick and a 610 tick. I can't remember what the third one is, to be honest. But I have those loaded. It is nothing short of amazing. In fact, I have engaged with him. He is doing some research and back testing for me. And if we like what we see, we may open up a trading room. Absolute amazing results on those tick charts. But I can't say there's no better or worse time frame. Now, I will tell you this, and I'll be honest, with most traders and well as most strategies and things like that out there in the trading universe, I mean, come on, how many strategies, indicators, courses, methodologies that you've seen? There are hundreds of them, and some are good, some are not so good. I want to trade with high odds probabilities of setups and price action setups that work, and not knocking anything, but there's things that work per everybody's situation. But usually, typically, the longer time frames are where most people should focus. I would say, 4-hour daily, maybe weekly. Those are really your higher probability odds trading. But trading off a tick chart, trading off a 1-minute chart, 2-minute chart, 5-minute, those lower time frames, it takes a special individual, and it takes time and commitment and focus. So it's a double-edged sword. It can be good or bad. Maybe I rambled on there. Is there any software that is available to spot these? Well, I think hopefully I answered that in this presentation, Rick. I'm just going through the questions here, getting caught up. William %R. Haven't looked at William %R. I am familiar with it, but it could be the same. Like if you want to put it in there with the CCI, MACD, stochastics, MACD, RSI. Again, like I said in the presentation, it doesn't matter which one you want to use. It's really the concept. Looking at that price action, and then adding whatever favorite oscillator that you may want to use. But what we do in the price action course is trading in conjunction with price levels, because really at the end of the day, regardless if you use this or not, price action is king, right? So being a naked trader is really what it's about. But what we're doing is using indicators to help us with our price action actions, actions, for lack of a better word. Looking, we're talking about key levels, dialing in from the higher time frames. So really, if you are a short-term trader or a higher time frame trader, that price action course will help you. If you want to go down a weekly, daily, and do more swing based, or monthly, weekly, daily, more swing based, or daily 4-hour hourly, or hourly 10-minute 1 minute. It's all about everybody's preference. But I'll happy to take a look at that. Did we start an hour early? No, we started at 7 Eastern. If something said otherwise, you could email me. I'd be happy to look, get my support crew on it. It is available for MT4. Can I show you an example using options? Sure. Walker, there is a scanner on Thinkorswim. Hey Craig, how you doing? Can we get you sent email, text, Discord, anything like you do with the other? I'm highly considering it. As you know, it takes time, and I don't mind that. I'm here to serve you and the community, and if we have that and we have participation, it makes everybody better, right? And so what I am talking about with this other individual that I mentioned is maybe to come help as, say, a co-moderator for those that are looking for a little bit more activity, maybe on an intraday basis, as well as potential swing ideas. And so, yeah, I am looking at a possible Discord channel for this, and possibly maybe a separate alert where you'll actually get email or SMS text. But I'm happy to entertain any ideas for you guys. Rick, will scanner be available on TradingView? Man, if it was, I would be tickled pink. TradingView, I like it because it's just cloud-based, it's easy. I'm constantly looking at charts and quotes on my phone, probably when I shouldn't be, when I'm on the couch or even laying in bed. But it's just so clean. So I use TradingView. You can load this on multiple platforms, guys. So I got TradingView, sometimes MT4 up on one computer. I've got Thinkorswim running on another PC next to me on multiple monitors, where I'm running the Divergence and my 1, 2, 3 stuff, both indies and scanners over there. But you can, I've got accounts with Ninja and TraceStation. I just don't use them. If we go into a back test, build out a back testing thing, I'll likely use those a little bit more so than I am now. Yeah, we'll take a look at that. Why is the phrase seasonal in the name? Good question. So the name of my company is Seasonal Swing Trader, obviously. You can go to my site and see that. So when I first started the business, I focused more on swing trading seasonals, swing trading based off seasonality. I've always traded based off high probability technical analysis and price action, and then incorporating seasonality, and that was kind of our initial or core service. I will use this divergence indicator in conjunction with seasonality. Doesn't mean that I have to have one or both in line, meaning that hey, IBM is a bearish setup, but I don't have a divergence signal. That doesn't mean I'm going to short, or vice versa. I will obviously incorporate seasonality as often as I can, but I don't really do it on an intraday basis. It just happens to be the name of the company, and I guess I'm stuck with it. Let's see. Leopoldo, the TPI is going to be more similar to the MACD. How does it work for TradingView with no scanner? Paul, I'll show you. We'll look at some examples. Those exactly what I'm going to look at using the TradingView platform. All right, I'm just trying to catch up, guys. It's not available for MT4 because scanner cannot be built for the indicator that we have running. Charlotte, you can load it on both Toss and Trade Station at the same time. If we can get a real-time scanner built out, we will absolutely do it. The scanner is real-time. No, Charlotte. How is it downloaded TradingView? It's about a 3-click process. Very simple. I'll show you. So this is the members area. Here's your indicator downloads. Here's your scanner downloads. Here are all of your installation guides. Very, very simple. It takes about maybe 50 seconds to install it on TradingView. Here's your price action pro course module. Your 10 modules. You just go by these step by step. They are in order. They're congruent. Put it all together for day trade, swing trading. Here's all of your resources and bonuses. The trade journal is what it is. It's just a spreadsheet for you to keep track of your trades. Oops. Sorry about that. We go back here. So what we are actually, we're going to look at charts in just a second. I'm trying to get through all these questions. Do you have to be available at the time you give a seminar? I'm not sure what you mean by that, but you don't have to be available at all. You can download this and do your own thing, or if you want to utilize myself and support, you can email me at any time. There's no limitation. You know, we don't say that you only get 60 days of customer support or 365 days. As long as I am alive and kicking, we'll continue to support the product. Let me knock on wood. Wonder what the profitability of the software really provides. Do you have any statistics? We can take a look and show you several examples. Profitability all lies in the trader's hands. Versus a hit or miss. It can be, yeah. If you just trade it blindly and trade every buy or sell signal, yeah. But what we do is teaching it in a very methodical way with price action, where it becomes really second nature for you to not have to guess. High probability trades with substantial risk to reward ratio. Yes, Sadi, we can help you download we can help you with the installation download. I'm not the tech wizard or guru. I've got a support team. So yes, I do manage my own inbox, but I have a support team that does all the tech stuff, helping you with password changes and logging in and all that jazz. If you need extra help, my guy can do a remote session, actually log into your computer and install this for you. Happy to do that. We just need to reach out to me at support@seasonalswingtrader.com. He'll set up a session. Not available today, right now, but will be tomorrow. You can email me support@seasonalswingtrader.com. I don't recall say anything about giving seminars at 7 p.m. Somebody was asking me why I didn't start on time. I guess he thought we were starting at 7 Central. We start at 7 Eastern today. Yep, we'll get NASDAQ in just a second. Okay, I think I'm caught up here on questions. let's get to the good stuff. Let's talk about charts. All right, let's see. Charts. What am I looking at here? OJ. All right, so what I want to do is I'm going to show you, I'm just going to kind of, I know some of you have specific requests and symbols. I want to show you though, for those, just start kind of top down here or bottom down, go from the lower time frames up to the higher. And we'll just look at we'll look at all the major markets. What are the 5 major markets? S&P, crude, gold, bonds. Let's take a look. All right, so, all right, you get to, and let's just start with the old 1 minute here on the S&P. All right, so today's action. Here's the cash close. Cash close right here at 3 o'clock. Let's just go back to the start of the day on a 1 minute chart. Somebody told me, somebody said one time that they typed in, they said, you're not a professional if you're looking at the 1 minute chart. I don't care what you want to call me. Somebody asked to look at the 1 minute chart, and the 1 minute chart is damn reliable. So you can do whatever you want. As I said, the 910 and the 687, or not, excuse me, 987 and the 610 is something worth writing home about. I don't know if TradingView has tick charts, but when you get enrolled into the package here, go pull it up on TOS, TradeStation, Ninja, whatever it is you use. Take a look at the ES crude and tell me if you're not just foaming at the mouth. All right, so let's just start here like around 7 a.m. This is your div sell signals right here, down here in this pane. And we can see that we have a couple buy signals coming here at 8. And we'll see time and time again how we're basically calling tops and calling bottoms. But do we take every signal? No. And you'll know exactly why when you go into the Price Action Pro course here. You'll know why. But if this is a scalper's delight, scalper's dream. You see buy, you see sell, sell, buy, buy, buy. That one's probably a loser. Sell over and over again. Let's look at crude. Let's go back to the start of the session. Get a lot of nice scalp trades in before 8 or 9 o'clock. Call it a day. There's a long. There's a long. Here we see we had a series of shorts. We use trend line analysis a lot. So you're not necessarily taking these, you're not even taking that. You will get short on the break. Here we finally get the final top right here. Here we have we're trying to buy the market, but you can see the trend is down. And then we don't really have a trade because now we're in the last 20, 30 minutes of the day. Let's look at gold and bonds. And we'll look at swing charts. I know not everybody's trading off the 1 minute. Right, so we got sells coming in here on gold this morning, followed by a buy, followed by a sell, followed by a sell, and then the market kind of flatlines here after lunch, and then we get a sell here. This is after cash close. Then let's go to bonds, and then we'll take a look at the 10 minute, and then we'll start looking at the higher time frames. All right, bonds. Bonds have been getting whacked. So here, let's go. So we had markets pretty light this time of day. 6:30, 7 o'clock in the morning. I would have got long here on that trend line break for a scalp. Here's some shorts here right after cash open. There is a long, there's a short. Here we have long. Here we're working shorts. Nice trend line. Short, 19 down to 16, $31.25 a tick. This is 2 o'clock. Scalpy action. All right, let's go to 10 minute. Let's go to 10 minute. All right. So this is somebody else asked me how many signals. Well, it's like anything. Lower the time frame, the more signals you're going to get. Higher time frame, less signals you're going to get. I've got to run how many spots are left. Let's see. Looks like eight slots have been taken, maybe. Hang on. No, 11. If you've got to run, email me support at Seasonal Swing Trader. We'll hook you up. All right, 10 minute. This is European session. I'm sleeping. Here's a signal that came in at 10:30, 10:40. What's this? Move right here. This is about as clean as it gets right here. Nice trend line break. Divergence signal. I would like to see price action, or structure. And George, we're there. And that takes us from 07. This is the last swing high before we started making new lows. Right here. We go from 07 up to 18, 10 ticks times $31.25, $300. So we have one signal there on the 10 minute, 30 year. Let's look at gold. All right, European session, early New York session, nothing else, no trades today. Let's look at crude. One trade today, 12.50. Trend line break. Our first target. First target is going to be right here. Second target is going to be right here. Oops. So we go from 61.75 to 61.35. What's 75 minus 35? Is that 40 ticks? It's $400. Stop up here. Second target here. Looks like we got a buy here while we're doing some work tonight here on the presentation. What else did I miss? Did I miss ES 10 minutes today? So we got a short here at only had one trade today. Short here around 130. First target's going to be right here. So it's a 38.50 down to 38.35, 15 points. We'll look at NASDAQ. It's probably going to be around the same signal. NASI. Oh, wow, we actually had some buy signals come in. Actually had some buy signals. No trade. Trade. Got a buy signal coming in here while we're talking. Netflix. Yeah, let's look at Netflix. So today, that was just yesterday, had a buy on Netflix coming in here in the last hour of the session. While we're talking about that, is thanks again to feedback from one of our students. And this is where the feedback that I get from you guys is very helpful because it helps us improve things that we're doing and it benefits everybody. Some folks are trading off of the hourly, the FANG stocks. So these are nice little swing trades. You could see we had, a buy come in here, sell come in here, buy come in here. So those are trading maybe weekly options, credit spreads, maybe debits, pretty killer. Let's go to Facebook. So we got kind of flat, we got sells, buys, Google. So we had a buy here, nothing since January. And then Apple. And last trade setup was here on the 25th. So those traded weekly options, I mean, you're selling out of money spreads. You're just kind of banking premium there consistently. So I would have waited till that trend line break right there. And remember, I would be looking for some type of price structure, which we get kind of around this area right here. Why? Because it's because of trend line break. This is also an area right here where we cause new highs. So that's why I consider that a key area. We'll be looking at the higher time frames as well. Did that help answer your question, Charlotte? Rick, yeah, you can load on multiple platforms. Oh man, I scrolled down. I saw all these other questions. Sorry. If I understand correctly, this is a scanner on a daily basis that will bring high probability trades. I guess the answer is yes and no. This is not just necessarily a scanner. It's an indicator, but we also have built scanners on TradeStation, NinjaTrader 8, and Thinkorswim. So it's an indicator for all of these. This is the indicator. This right here is the indicator. This is the indicator. And then the scanner you'll get on, you'll get on TradeStation, Ninja, and Thinkorswim. Why is there no scanner on MT4 or TradingView? Because we don't have, it's just not possible right now. Potentially in the future, but it's not possible right now. Yeah, it works on any exchange, whether it's NASDAQ, SIBO, NYSE, AMEX, Indian stocks, Canadian TSE. Gary, shoot me an email. Support at Seasonal Swing Trader. I'm not sure about that. I'll hook you. We'll help you. I don't have. I'm on my laptop that does. I'm not running Thinkorswim, TradeStation, or Ninja as far as showing you the scanner examples, but it's very simple. Simply, loading the time frame, the markets that you wish to scan. Your group of 35 commodities or your group of 100 stocks or whatever it is. Your time frame, 4 hour, daily, weekly. You have the ability to, inside that scanner, how many bars do you want that symbol to remain on your watch list? Because we know that we may get a buy signal here, but it doesn't mean that we're just going to go in and get long. But we might want to keep it on our watch list. So you can choose, keep this on my watch list for the last 10 bars. So if I'm on a daily scan, it's going to keep it on there for the last 10 days, okay? And then if you're on an hourly, it's going to be for the last 10 hours. Can signals be sent to your phone via SMS? Depends on your platform. So like on TradingView, I do have price, excuse me, I do have alerts set up where I say alert me, send me an email or SMS text if the divergent signal appears, and I'll be alerted accordingly. As far as the others, you just have to check with those respective platforms. I think you can do it with MT4. I'm not sure about TOS, NTA, or TradeStation. Yeah, you're welcome. Yeah, let me know if you need any more clarity on that. Yeah, so daily, let's look, guys, some daily charts. So just looking at Netflix here, the last two signals we had were here in September. We had a sell, and then we had a sell in Feb 12. So SPY, when we have strong trending markets, we're going to get, if we have strong trending markets, say to the upside or to the downside, let's say to the upside because we're looking at SPY, we're going to have a lot of potential just sell signals, sell, because we're making new highs. We're getting divergence. We're not making lower swing highs. When we're not making lower swing highs, we're not going to get those necessarily those buy signals, although we did right here. So if you're getting those in strong trending markets, it's one I would encourage you to like go down to to a lower time frame. If we go to SPY, I'm going to flip to the S&P because we're trading virtually around the clock. We look at the S&P, then we can start seeing all kinds of signals, both the long and short side. Look at these swing setups on the 4-hour here. We know that the market's been in a crazy uptrend. Starting to get a little volatile, picking up some of the sell side action lately. But looking here, I mean, huge sell right here. Huge sell, picked up a buy right here, picked up this sell right here, picked up this buy right here. Now, right now, there is no position. I mean, we get long right here, and targeting here, up in here, you can see that it reversed, and then you could go down to the lower time frames if you want more signals. Now let's see, XOM. So the last batch of signals here, we had a sell in June. You see we had buy signals coming in here. I mean, excellent place to be selling credit spreads. Here we had a sell, here we had a sell, and we're getting another sell right here in XOM. So what I'll be doing is watching this right here. I'm not taking that sell signal just because I got an arrow onto a chart. It's not a green light, red light system. Ulta. So nothing but sell signals. Let's see how they played out. We had sell June. We had sell sideways to lower. Down, it's sell sideways to lower. We had sell 300 to 280. Got a sell signal coming into play right now. Want it for a trend line? Want to connect at least 2, preferably 3 swings for your trend line. T and VZ. So we had sell in June. We had buys coming in here in October. Sells in December. It's been flat ever since. ITC daily. So we had sell, we had a sell before earnings, and then we had another sell coming in. This is looking pretty good to me. Trend line breaks. The weekly. So here we are on a longer term time frame, getting these sells. Here's another one. The sell, was it caught? Printed on that bar. This is a weekly chart. All right, so we had sells. So we got our sell here, and then we had a buy right here. Euro CAD. See, currencies, here we go. All right, so yeah, I mean the longer time frames, I think the stronger the signal is, and that really goes without saying for any system or methodology. So daily, we got longs, we had a short, and now we flip back to the long side. Yeah, you're welcome. All right, guys. I can't tell. I think we have like 12 or 13 signed up. If you need overnight or whatever, you have something to do or had to leave, email me support@seasonalswingtrader.com. I'll be happy to answer all your questions. If you have any other questions that I missed or you think of later on, email me as well. I'll be happy to get to you. Look forward to working with everybody. If you have suggestions, comments, feedback, good, bad, or ugly, let me know. For those that would love to see more, you know, again, email me if you say, hey, this is great, but I love it if you had that. Let me know. I'm not afraid to incorporate that. Any enhancements, things like that we're doing, actually, we are working on some right now. And let me quickly tell you what those are. It's a top secret project. Just kidding. What we're working on is adding levels. We're adding a stop level and 2 profit target levels. So anytime we make enhancements, we will do it across all platforms where it can be done. Some platforms have limitations, but where it can be done, we'll be doing that, and we pass that along to you. You'll get a little happy email that says, hey, we did XYZ update. Check your membership area for the newest version. We're not going to say, hey, it's going to cost you $10,000. No, we don't do that. Now, if we do something like, back testing, optimization, components, alerts, that may be something down the road that we look at, but it's just kind of a newer product. The strategy is not new, but this tool is a newer product. I mean, it's really a game changer. The arrows appear on the close of the bar. Chart does not have to be the platform does not have to be open. Look, I'm not staring at my chart 24 hours a day, so I get alerts all day long in the middle of the night based on the time frames I have them set. It could be an hourly, could be a 4-hour, could be a 10-minute. I'll get an SMS, text, I'll get an email saying divergent signal on XYZ, euro currency, S&P, crude, whatever it is. You're welcome. Hi guys, been my pleasure talking to you today. I'm very happy for all those that have signed up. Look forward to working with you and us working together for a long time. And I do value everybody's feedback. My community, my clients, my members, it's because of you that has improved a lot of the things that we do over here based on the interest and those things that those are doing. And it's really at the end of the day about utilizing something that trading is not simple. It's not easy, but we can simplify the process and declutter and try to make things less subjective, more objective. And when we can do it all together, we all help each other. So I look forward to that journey with you. And I think we will call it a day. I'm not sure what the question is. Is that for the indicator? It's for the, you get the indicator and the scanner. One-time fee. All right, guys, no problem. Reach out if you have any questions. Have a great rest of your day. Good luck, good trading out there. Stay safe in the markets as well as in your health. And we'll see you on the flip side.